All right, today we have on Liam Heger from Unto, which is building through blockchain. We're going to let him describe all this. Liam is, according to many people, one of the truly elite engineers. So you're going to have to live up to that. But formerly working on Firedancer and now working on his own L1. So welcome, Liam. Yeah, maybe just a little bit of what you were... when did you get into crypto?
Yeah, so actually, it's an interesting story. So my cousin Robbie Heger, emailed me in all caps, and he said something to the effect of, "Do you want to help me with my crypto startup?" It was during COVID. There wasn't much going on. I was actually working at Google at the time, and my cousin Robbie's a pretty eccentric guy. So I just replied, "Sure, I got nothing else going on." And kind of kicked it off from there. I was working with him on a product called Endowment, which is like a charity. You can come and give your crypto, and they can delegate it to any 501c3 registered charity in the country. And so I did that for a while, and then I kind of through him met Michael and Vance at Framework Ventures, and from there joined there's this like subsidiary called Performant Labs, and we did a bunch of trading, and that was actually a really great time until kind of structural stuff in the market happened. Luna, Terra stock kind of blew up, and so a lot of the liquidity fled the market, so trading there became very hard. And then the rest is history. I worked at Firedancer after that, and for about 2 years, and then started Unto.
You don't even know the
See,
name either.
Yeah. We were actually just talking about this, that just like monad gets pronounced monad and monad, now Unto gets pronounced Unto and Unto.
Okay, well, all right, I want to go back for a second. You said you were trading. Yeah. Were you doing like all liquid stuff, or what was sort of the general kind of structure there?
It was all liquid. Principally, like there was a lot of farming going on. There was a lot of things like that, and institutional size capital could really capitalize on that kind of strategy. And so that was really the idea there, that like you could basically play a arbitrage between the CeFi and DeFi side of the market. That's now fairly efficient, but we were playing it really early, and it was reasonably profitable for a while.
Okay, so then what were you hired to do at Firedancer? Like, if you had to summarize your role, this stuff is like somewhat, foreign to me in terms of, I feel like you talk to protocol engineers, and some of them can be working on the most, niche little like microstructure, and some of them can be working on like the whole package. So what was your like primary role at Firedancer?
So I think everybody at Firedancer is hired to work on, like, there's not like, you can't just step into a high agency team like Firedancer and expect to work on one thing. There are very few people that do that. Like, we're talking like hardware engineers and things like that, where that's their like industry, like their whole career has been in that hardware side of the industry. So for me, it was really like software engineer, building out components for the Firedancer client itself, or associated like tooling and whatnot. And that's principally what I ended up actually doing.
Okay, got it. And then you moved on now to Through and Unto. Let's hear the pitch, and then we can go from there.
Yeah. So the core idea is that Solana is not the final evolution of high performance blockchain. And certainly, the SVM chains are not necessarily the last like evolution. The reason I say this is that like I've seen what Firedancer was able to do, and it will, for better or for worse, like Solana will limit what will limit what Firedancer or Agave will be able to do. The Solana protocol itself, it will take a long time to evolve that protocol, and I'm just not willing to wait. And so we're kind of designing from the ground up for performance for scale. And we've actually, our team has actually built these things before, and we know what doesn't work, what actually scales. I think that differentiates us as like a, as a team. We've also seen like I have traded on these blockchains. I've done a lot of work both on chain and off chain, and so I think like we also have a bit of also better understanding of how to make the product integration experience healthy, right? And actually, not like the Solana like chewing glass. I think we really want to evolve the whole phase of things, not only scale, but also like scale the developer experience, right? And so we're working on all of those pieces right now. So happy to dive into any more.
Okay, so like maybe like Eugene and I were probing about this the other day, and so like hopefully I'll be the first. I'll be like the first opportunity for you to like sort of explain the structure. But maybe we could go back for a second and maybe try to tie these two together. Like, what were your takeaways specifically? So you said that like Solana, for example, was going to limit Firedancer and Agave, and what is an example of that in your mind? Like just the fact that they have to come to consensus in a certain way and it's distributed across the world and that is high latency, or like what in your mind were some of the things that stood out with your time building these systems, right? Like this is one big advantage of talking to you is that like you truly were like in the weeds here, right? So like what were some of your takeaways? You said like, this is, a clear, performance improvement that we can make.
Yeah. So I actually really like this analogy. It's actually a very low level detail, but I think a lot of people will get it. One of the things that really can slow things down is like how much time you're spending resetting for it to run another transaction. So I just ran one transaction and now I need to clean up everything and then start up another one. And so there's, this is not the only area that needs improvement, but I'm just saying like even in Ethereum and Solana, they spend a lot of time cleaning up and starting up for each transaction. You can actually get rid of most of that. We have done that already. And so there's like a dozen areas like that where it's like, okay, structurally they have designed this thing that requires all of this setup, all of this cleanup because they want to make the developer experience elegant, but in actuality that doesn't help very much. There are other things you need to do to make the developer experience nice. And you can, handle that elsewhere without having to have all of this set up and clean up. And so like, there's a dozen things like this, for example, we could talk about like Quick and all the arguments there that happen in Solana and that networking protocol. So like, it's really low level structural things. And those things all trickle up to like developer experience and affect it. And I'd say like, it really starts at the very lowest level where, like I said, we're like really starting at the very bottom of the stack and working our way up. So yeah, I mean, that's probably the best example. I spent all day thinking about how to like speed up our transaction startup, and all sorts of things like that.
Okay. So can you kind of like working backwards, like Brew will come to mainnet at some point in I don't know, whenever, right? What do you feel like are the applications you're optimizing for? I mean, you come from a trading background. I would assume that this is generally the direction you're headed, but like talk me through from like starting with an application and then, maybe where like through can optimize for that.
Yeah. So I think about it like a little bit differently. I think more about what does it take to run a sustainable business on chain, and less about necessarily the particular applications. Okay. The reason I say that is that like, we may try and build some of the first applications, but at the end of the day, like these applications are businesses and I want to make sure that it's like sustainable for them to be able to run. So that means, giving them control again of things like, they have their own transaction flows. Let them control how those get included on the chain, right? We've been sharing that from Solana. That's what's going on with the CLOB wars right now, right? Like, do we let the chain control the flows, or should the application control them, or should the application just be its own chain, right? And that's kind of the big discussion that's going on right now, right? And so, yeah, I mean, like I really spent a lot more time thinking about like what features can we add to the chain that enable that, rather than like what are the like specific applications, because everybody ends up asking this question and it's like, yeah, there's going to be tons of applications if we do really well, like, but the specifics don't matter if those businesses aren't like sustainable and they don't have users, right? So
okay, so let's go to the CLOB wars for a second. Like, give me your stream of consciousness thoughts. Like you said, should the application order these transactions, or should it be the distributed, nodes around the world. Like, what? Start rambling. I'm curious. Like, we said we talked about this before, and I'm curious your opinion now.
It's like it's fascinating because, like, first off, I really love Jerry and Eugene's take that it's like, okay, I don't read posts by people who don't write code or don't have users. So like, I do write some code. You may not, Jerry, Eugene, if you're listening, like, you can discount, everything that I've said because I don't have any users. But I think this about the CLOBs, that structurally the application probably should, we're trusting the application with a lot already, right? We're trusting the application to accept our transactions, to they transit through their chosen RPC endpoint or something, right? They do all this stuff already. Just give them the last mile as well, which is like, hey, I want to be able to own the block space myself as an application too. And what that means in the case of Through is application actually can be a block producer themselves, right? So the idea being there that there is a proposer builder separation. The application can own their flows. So they can send it to all of the transactions to their flows from their front end. And they can even conditionally in a smart contract say, hey, if there's an order that's aggressing, the only way it can get past, let's say, a speed bump or something, right, is if it's going through my block as an app, my application's block, right? Otherwise, there's a speed bump, right? Because, we're already trusting the app to do all these things, right? Just go the last mile and let them do the ordering. And if you don't like how they do ordering, stop using the app. It's a very simple choice, right?
Yeah. Can you maybe at a high level explain sort of the structure, the consensus structure? Because I know that we have chatted about your reservations about kind of the way proof of stake is designed, but I've never really gotten more out of you in terms of do you mean that proof of stake as a concept needs to be ripped out altogether, or do you mean a modified version? I'm kind of curious now if you could talk a little bit about the consensus you're hoping to build.
Best place to start there is actually to step back and look at the two families of proof of consensus algorithms, right? Byzantine, they're not even necessarily Byzantine fault tolerant. So there's Bitcoin. So Tim Roughgarden has an amazing paper where he discusses all of the families of Byzantine fault tolerance or kind of general blockchain consensus algorithms. There's kind of a Bitcoin family, and he calls those external resource consensus algorithms. So that is to say that the external resource that secures the network is electricity and its cost, and the fact that hash power is actually expensive, and there's a bunch of trickle down things, and people will say, oh, the Bitcoin price is tied to the cost of electricity, whatever. Then you have internal resource networks, consensus algorithms, which are proof of stake or proof of space or any of those things. And proof of space is actually an external one. Proof of the proof of liquidity on Berachain or proof of stake on Solana or Ethereum are internal resources, right? So you got proof of work, proof of space over here, and proof of work or proof of stake over here. And so the principal thing that we wanted to do was we still wanted the internal resource model, right? We didn't want this proof of work thing because the problem with proof of work is actually it doesn't incentivize people to perform well on the network, right? It doesn't incentivize people to include more transactions or, do any of that. It incentivizes people to build more hashing power, build more, find cheaper electricity, right? If that's the case, if the goal if the goal of a blockchain network is actually to include as many transactions, to lower fees for users, to, begin a flywheel of kind of token, native token cash flow, then you have to start incentivizing people to do all of those things. And the only way to do that is to have competition in the network. So what does that mean? In the case of Solana, there's competition on the actual demand side. So when you look at Solana, you've got people who demand block space. Those are the people sending transactions, right? And then you have all this amazing amount of competition and market dynamics going on right now, and it's sufficiently sophisticated. But what you don't have is you don't have supply side competition. So that is the block space side. So in Solana, you have every block producer, they get 1.6 seconds to make 4 blocks, and during that whole time, there's only one block producer, right? So they have a full control, a full monopoly on the block space. And so I'm not crazy about this, right? Like, this is not a real market. So I believe you got to break it up and do, you need to have more than one block producer. So that's like solution 1 for consensus. Break it up, more than one block producer. We can get into what that means in a minute. The second thing is stake also doesn't incentivize the network to perform effectively. So what do I mean by that? It, just like proof of work, like incentivizes people to accumulate as much hash power and the cheapest electricity, proof of stake incentivizes people to accumulate capital, right? It doesn't actually incentivize people to necessarily have the high, like lower fees or, push down to be competitive with their fellow block producers or validator set. So what we are thinking about is what does bring that competitive aspect back? What does do that? And it really looks more like a proof of burn, right? So as a block producer, what you do is you say, okay, I'm producing a bunch of as a block producer, I'm producing blocks. I'm paying the validators to include my block. I'm competing with other block producers to do that, right? And those validators, they are going to make some percentage of the fees, right? They're going to share them. They're going to go into like a pot and they're going to share them. And what each validator gets to do is they get to decide. They make a decision. When I make these fees, do I want to take the money off the table, or do I want to turn that into more like quote unquote like validator power, right? So it's more like, hey, if I'm a really effective validator, my margins are really good, right? I can increase my profitability, or I can increase my margins, like quite literally marginally, by burning some tokens and turning it into validator power. Or I can continue to or I could just take that money off the table and I will my competitors will burn and they will gain more power and I'll be made obsolete. Right. And so this gets people really competing on like, hey, like I want to provide the best fees, so that the lowest fees and the like best pricing, because that means that I get, and I want to be the most profitable so that I can take this money off the table, as opposed to having to compete to burn it. Right.
All right. Well, we'll come back to this, but let's go back first to, you were talking about multiple block producers. So is this somewhat comparable to something like multiple concurrent proposers? Like this is the direction you're thinking as well?
I actually don't believe in the like MCL, MCP like believers. The reason I don't believe in that is that you just have the same problem as single leader, but now you have now you have multiple leaders that you now need like ordering rule for, like, okay, I have a whole block. I need to like take those 4, like let's say I have 4 leaders all at once, and I need to take those 4 blocks and like arbitrage and figure out which ordering they go into. And there's timing games and all that stuff that comes along. And it's timing games now where there's like 4 leaders or 16 or whatever number. So I actually believe that like you have to go to the full extreme and go full leaderless. So like Bitcoin, right? Bitcoin is a leaderless protocol. Anybody can come in and produce a block. It's all about who builds the longest chain in that case, right? So in our case, I really believe that like the only way to actually get real competition without all these like insane timing games is to go with like a leaderless protocol.
Okay, what does that look like in practice?
So in practice, you split up the block production from validation, right? So anybody in our case could be a block producer. They just have to post a small bond to cover like fees of a block, right? So like if they post a block with like 1,000, that charges 1,000 tokens and fees, then they need to just post up a bond in the event that like all those the transactions can't afford it, right? And so really anybody can be a block producer, and they come to the validators and say, I'm willing to pay this amount, right? I have this block, I'm willing to pay you, let's say 10 tokens. And they will have other blocks coming in, and they'll be, someone might say, I'll pay you 12 tokens, or I'll pay you 6, right? And they have a decision to make about which one they want to pick up and include next, right? And so what you get then is like you get this competitive environment, right? That really is quite desirable, that actually forms a real market that will get sophisticated actors coming in and actually like trying to build the most efficient blocks and using the block space efficiently.
What is the biggest difference in what you're describing versus just, well, we can go to like vanilla PBS on Ethereum? Like what is the biggest difference there?
The leaderless aspect, right? Because even in Ethereum's PBS, you still have a 16 or 14 second monopoly on the block space, right? So Ethereum, they still have, everybody's competing with the leader, or they're like all competing against the single guy who's, offering block space at maybe, they maybe like give side deals to a better, participant. Whereas if you have a leaderless protocol, you need to get like, 66% of the validator set on board, right? To be able to get that block included.
Okay. Right? I see. Yeah. I see. There's like, it's the proposer monopoly. Like
yeah. Yes.
Okay. All right. So like, let's go back to this, like burn versus take off the table. Not so clear. So like, give me a high level, like idea of the design there.
So again, like I said, let's say we have like a block producer, and let's say it's like fart swap. That's the classic example I've been using. So like it's some swap protocol, they're on the chain and they want to build their own blocks. So they take in a bunch of transactions from their users, and then they make a block, and they're willing to pay, let's say 3 tokens for this block. They come in and the testers all vote on it, right? And they get some pro rata share, right? Instead of having stake, they have like validator power, so to speak. And that validator power is like, looks very much like stake. So they get like a pro rata distribution and of the fees from that block. So that 3 whatever tokens get split up by whoever has the most validator power. And, at some time later, the validator can come in and say, well, actually, I want to increase my tester power, right? I want to make more money. And if I have higher pro rata share, I'll make more money. Right. So what they'll do is they'll burn some tokens and they increase their pro rata share of the validator power. Right.
Okay.
And so there's like this kind of like dynamic where people can either come in and like either choose to like stay or raise, so to speak. Right.
I see.
And the entire tester set kind of has to like compete there on that metric. And of course, like, what can actually happen is you can have like the validator power will be so large for some like, old guard participants where like they could keep doing this to where like there's more like validator power than there are tokens on the network, right? You could imagine that could happen. Yeah. What you do actually is you say, well, really what we value, because that looks like proof of stake, right? That's very proof of stake. What you really
in the long run, Yeah,
right. And so what you really want is like, hey, like, I actually value more like your present value, like for each validator, the value of that validator is more like their present effectiveness, right? And so what you could say is like, there's a decay, right? So like every, let's say every block or something, there's like a 1 basis point or some other function that defines, a decay function for all of the validators. And so, over time, as time goes on, if you don't burn anything, you will lose power, right?
I see. The Gwart Show is sponsored by Ellipsis Labs, who I've been following for 3 years now. They're one of the strongest teams I know in crypto. Ellipsis Labs is a small engineering team with a flat structure. They build complex systems, primarily in Rust. For engineers who like challenges, here's the kind of problem they solve. A layer 2 blockchain needs to maintain 100 million accounts and generate a state root after each transaction batch. The root must be built within 50 milliseconds. How would you design a system to ensure the root construction is fast enough? High-performance challenges are core to Ellipsis Labs' mission as they build modern crypto finance. They believe finance needs more than an upgrade. It needs a complete rewrite. The success of their first product, Phoenix V1, speaks for itself, doing over $70 billion in organic trading volume. Now, Ellipsis Labs is building Atlas, the blockchain purpose-built for verifiable finance. I know this team personally, and I like them because they're unique in the crypto space. They have a long-term focus, they work in person from their New York City headquarters, and they're here to build products that fundamentally change the world of finance. If you want to learn more about their open roles, go to ellipsislabs.xyz/careers. You're observing the CLOB wars, right? And you come at this from like a systems design perspective. Like, what do you think what do you think of the end state of trading? Like, that's kind of like a very broad question, but like, what do you think of what Hyperliquid's doing and versus what Solana is attempting to do? And I know it's like obviously not a perfect one-to-one analogy, but like, where are you in? What are your thoughts on just the end state of trading in general? Like, what you think should be optimized for? What people are doing well? What people are doing poorly?
So I think I find it really fascinating, like all the taker speed bump discussion, especially because if you really do like zoom out and look at traditional markets, the space of like taker speed bump, maker speed bump, invert, like there are exchanges where like the taker gets rebates as opposed to like the maker, and this all happens in traditional markets. Like, you're gonna see all of these variants in traditional markets, so I see no reason why you won't see it in crypto. And like, we're seeing that already happening, and I'm sure like there's like bespoke protocols that nobody necessarily talks too much about that enumerate all of these things. And so the end state of trading for crypto, I think there's a few major things. One is you do see these things all enumerated. No taker speed bump. Maybe we'll see maker speed bump. That'll probably be a narrative, and there'll be a fancy word for all of that. And I think we'll see all of those things enumerated just like they are in traditional markets, because there's desire for all of them, and there's different microstructure that's advantageous that people will learn how to arbitrage and make the prices come into line. The other thing we'll probably see is, and I hope we see it, is like registered and proper ICOs come back on chain.
Yeah.
Like businesses, hopefully big and small. And I mean like, really small, like maybe, mom and pop small business that just wants to be, on a penny, like not even penny stock, right? Where it's just easier to register on chain. So I really hope we see those kinds of things come online, just because like it's more efficient, right? Like it just is. Those are the two really big things. And then the other thing is like, I'm really curious to see if like what happens with commodities on chain. Like, do like things like corn, cattle, all of those. I do wonder if like there is a market for those things on chain. Like we're seeing, Vance really loves his like uranium derivatives on chain, like, and all of that. Like, I think like that's an interesting market, and it's actually one that, probably actually makes a lot of sense on chain. I'd be very curious to see like perpetual derivatives for other commodities, and just as like a experiment, even.
Why commodities? Like, is there some implication there? I'm not putting words in your mouth, but like, is there some implication there that NASDAQ, NYSE work quite well for equities, but there's some unlock that on-chain can provide for commodities that may not be currently tenable?
I think it's more so that people can get exposure. Like that. Yeah. That's like the first step. I don't think that there's an efficiency with respect to like, real commodities are extremely expensive to run, those kind of contracts. Like there's real delivery. There are real
exactly
cows.
Physical delivery.
There are real things. I don't think that it makes that more efficient. It would be very interesting to see. I've talked to some people that do like on-chain like shipping logistics. I'm curious actually to hear what they have to say about some of this, like how to manage like, your FedEx packing slip on the chain. But like, I don't think that it's realistic to say, okay, we're going to be settling real commodities on the chain. I think it just would be interesting to see if people will actually play that game that they, play with other assets already, with commodities and whatnot on chain. Like, will they use that as like, a place where they can trade against their PA, where like the contracts are a little bit simpler, right? A perps contract is significantly simpler than a CME dated future
For
with
sure.
like, minimum contract size of 100,000, pounds of beef or whatever. Right. So like, obviously people should try it.
Yeah. All right. I want to go now to where do you, okay. So maybe I would pose this like this. We're seeing a lot of teams break out now, like our friends, right? Like Doug with Fogo, Eugene and Jerry. And it does seem like the direction we're headed is this like, performance optimized chains, whether they're L2s, L1s, like some combination of both in some capacity. Where do you see Onto positioning itself in this stack? And well, go ahead with that first, and then I have a follow up.
This one I think about a fair amount, and the so you have the extreme end where you have Atlas, where it's like there's like the decentralization may come from Ethereum, and they are like the security and all that comes from Ethereum, and they've got their centralized sequencer, right? It turns out that like real like people who actually work in the industry, like actually there's no illusion, like those sequences are rarely actually just one machine. So like maybe you have some redundancy style of decentralization, right?
Yeah.
So, and we could talk about what those dimensions of decentralization are. And then you have Fogo, which is like, okay, we're going to be in one co-located area, and we're going to have really amazing low jitter, low latency, high bandwidth, and all of that. And then there's kind of us, which is still like, hey, we believe that like these networks operate well at, cross-continent scale. Like, doesn't necessarily need to be like, for example, Solana's mostly in Amsterdam and like a few places in the US, right?
Yeah.
Like there's no, like, I believe that that's actually still a good model, right? And you can get low jitter. You can't necessarily get like amazingly low latency, but you can get low jitter, and high bandwidth. And those are really important dimensions for performance. But I still believe that like some amount of geographical decentralization is important. And the only reason to have that is for the redundancy, right? And for, it's purely for redundancy. Like if you have like whole, cables get cut, undersea cables will get cut sometimes. And, you still want the network to be able to like viably continue going, right? Visa doesn't stop because like an undersea cable gets like snapped, right? So like I think about it like that. Like the decentralization is really important for reliability, resiliency, and less for all this other stuff that people kind of like plant it as.
What do you think now? Like again, we're observing a lot of teams launch or soon to launch as like increasingly high performant. Like, what do you think as a founder of one of these? Like, what does it take to win? Like, I'm giving just a naive example here. Like, what? Not necessarily saying that this will be the case, but like, why in your mind does Onto or through beat Monad? Why does it beat Fogo? Or of course there's this scenario where there's like room for plenty of chains, but I'm curious, like to the extent that there is a winner, why are you a winner?
Well, the most important thing that we have done is thrown away all the preconceived notions and started from fresh, right? So we don't have the same structural problems that Monad has and that Fogo also has, where they have like EVM, SVM compatibility to deal with, right? It's actually much harder. I learned a lot of this at Firedancer. It's way harder to engineer something to match somebody else's specification than maybe it's obvious, like than to build something from scratch based on prior learnings, right?
Right.
And so we're throwing away the SVM and EVM. We have like a RISC-V architecture, based virtual machine, which, you could build in like half a dozen languages, like build smart contracts in half a dozen languages, which is like, okay, let's like expand the pie of developers, right? So we're going to hopefully have like a larger possible developer pool, right? So we don't have to worry about like Monad has to compete with like Mega ETH, and all the other new, and all the other like EVM L2s that are going to, launch in the next year or so, right? Like they're competing with all of that mind share. And I just don't want to play that game, right? I think we could win on like expanding like the developer TAM, as my co-founder likes to put it, right? And the other dimension that we can win is like we're throwing out some of the consensus stuff and some of these like again like preconceived notions, and we're going to try something new that I think like actually incentivizes people who are participating in the network to make the network better themselves without like me having to necessarily ship a ton of software and ship all these improvements. People will upgrade their hardware naturally, right? Because of this whole new consensus mechanism. They're going to do all these things. It's not without risk, but I think like there's like a very credible chance for us to like really like take a swing at some of these like proof of stake networks.
Yeah, that makes sense. You were talking about we may build some of the first applications. I won't put you on the spot here, but what would be an example of an application that you think would be like an immediately, good onto or through rather? I keep like mixing these up. Whenever there's a labs and then there's a different name for the blockchain, it's like always very confusing. What is like an example of an application that just like finds a natural fit on through?
Like naturally, right? You'd have to build the DeFi primitives. Those have to come. We think a lot about like how Onto Labs will be like revenue generating. Like I know that's all meta, but like we've been thinking about this since like the beginning. Like we are thinking about like, even if let's say a DEX or, a name service or something is not particularly profitable, it's more about the exercise of like as a team owning products and going through this, like growing through the pain of doing that so that we can have a really good developer experience for the external people. Because like if we can't do it internally and we can't maintain them and we can't be an effective business internally, like I don't see how anybody else could be, right? Like it's just logical in my mind, right? We're also thinking, what about like, we're gonna, if we go back to your question about, why can we win? And I said we throw a lot of stuff out. Like another thing that we don't necessarily get by default is like service providers, right? With all these EVM chains, you expect service providers to come along and all that. Like we're going to partner with the best people that and the right people and the ones that want to work with us. But there's no reason why we will not, run that first like public RPC service, right? And go through the exercise and go through like the dog fooding pain and really like try and build something effective that, either it spins out or it becomes, part of some other business or is just our like, public RPC service. And again, like I said, the reason is to do that is either to one, improve developer experience, improve the experience for users, and two, one of these might pop off and potentially be like a real revenue generating business. And that's exciting to me. Right.
Yeah. As it should be. Well, we're really hopping around, but we said before that we were probably going to be pretty scatterbrained and hopping around. But I wanted to go back. All right, to qualify this, I haven't followed this like extremely closely, so my facts could be off. But a year and a half ago, I don't know the exact timelines, but Firedancer, so this started out as a grant, right, from the Solana Foundation to build an additional client, right, and this is the one you were working on. At the time, I say at the time. A year and a half ago, this was proposed to be like the next massive unlock. Where is it now? What has kind of happened? Anza, the other client team, has seemingly stepped up their game. So there's friendly competition, obviously. But I guess what I'm getting at here is Firedancer was supposed to be like the discovery of Fire at one point from at least what I was hearing. And then I haven't heard a whole lot since then. I know there are some like 10% of the network is Firedancer, but like what has kind of been like the story behind that to the extent that, you can share and what your thoughts are on where that's headed?
Yeah. So I can't speak too much to like any grants or,
that's fine.
Or to like what's going on. Like, I don't know what's going on inside of the Firedancer team right now. But I can tell you this, like, I think around last breakpoint, I think something awoke in Alessandro, who is one of the Agave, like Anza engineers working on their point, and something awoke in him and he like really started pushing very hard on performance engineering for Agave. And they've made like huge strides since, somewhere in the middle of last year. And so they're catching up. Like they are implementing things that like Firedancer has things like, for the nerds out there, like XDP, they're implementing that. And that's a very fancy thing that Firedancer, was doing. So I think like Agave is going to catch up. The one concern that I have just generally about Solana is that, at least for Solana's consensus model currently, and I'm sure some of this ports over to the new like Alpenglow consensus that they're going to do and all that stuff. The one concern is that unlike Ethereum, where like as long as one client is functional, like things will make progress. In Solana, the chain comes to a halt if there's disagreement between two clients. If certain certain thresholds, like if it's like at 10%, it's not so big a deal. At like 30%, it becomes quite problematic. And beyond that, it towards 50%, like the chain will just halt if the two clients are not perfectly implemented against each other. And so I do worry about that. I hope that there are I know that they have a lot of testing that both teams do across the board to make sure that things work out. But yeah, I would say if anything, Firedancer has pushed Solana to become better even before it has launched. And it's a very interesting dynamic that I never expected.
Got it. Okay. That's a good answer. Staying on the kind of the Solana development,
sure.
You were talking about how you feel that we were kind of putting a spectrum of chains, right? And we'll throw Ellipsis and Atlas into this kind of centralized sequencer, and maybe the value proposition there comes from verifiability and readability or whatever they're working on. I don't get updates. They sponsor me. I don't get updates. But only what I hear from Eugene and Jerry in the group chat. So we put them on one spectrum, right? Okay. And then you say you value the idea of decentralization from this concept of redundancy. I want to ask if you also ascribe to this belief that Tolly has been pushing, and to be fair, he's been quite consistent on this, but Tolly has been pushing, which is that you can build a network, and I'm being extremely reductive with this, but you'll obviously understand what I'm saying here. You can build a network with nodes all around the world, and you can actually outcompete TradFi on the grounds that if you have a node very close to what we're going to call market signal, that it will give better price discovery than even a centralized venue. Again, I'm being reductive in how I'm explaining this. Do you believe? So I guess to be clear, the point I'm asking is you value it for redundancy, which is it's been a long-standing value proposition of blockchains, right? Nodes, people keeping track of the ledger. Do you also think that this is a viable argument that if you're close to an event occurring, price discovery can happen better than on Binance or the New York Stock Exchange or on CME?
That this question always this notion that Tolly had kind of always perplexed me just a little bit, because the answer is no. We could spend hours probably talking about why the answer is no. So it all began with tulips. No.
Yeah, I know. Right?
But no. So the reason the answer is no is multifold. One of them is that in reality, the most efficient venue for price discovery, well, it's not even clear, but one dynamic that's particularly interesting that you see is in the US you have Chicago and you have New York, and those are where the majority of various contracts get traded, be it commodities in Chicago and equities in New York. And there's actually an arbitrage, a time-based arbitrage between the two. Right. And so Tolly's kind of getting at this, can't we just if you're closer to Chicago and you have the signal there and you ship the signal off to New York fastest, then you win. And it's yeah, that is true. You want price discovery to propagate at the speed of light. That's great. That's the limit. You're hitting the limits of physics. Great. But that doesn't necessarily make the market the most efficient. Right. That's just saying if you believe that HFT is the most efficient market structure, then Yeah, yeah, exactly. Like you would construct your network like Tully has described, and it's not necessarily the case, right? That and at the end of the day, that's why you have 20 different venues with 20 different terms, terms and contracts that you could trade on them. Like price discovery will happen where like wherever the people are. It's less actually about like all this like structural stuff, right?
Yeah.
The structural stuff matters, but like it's like okay, everybody's on New York Stock Exchange, but if you go and talk to an engineer working on like connectivity for New York Stock Exchange at like a major firm, like they'll have 20,000 complaints for you, right? They're not perfect venues, but it's where everybody already is. So like really, you just want to be where everybody's already trading, less, and typically that means being physically close, right? Less
Yeah.
globally distributed, right?
So do you think that there's a good enough that would still incentivize maybe not price discovery? Let's take that off the table for a second, like the
Sure.
literal definition of price discovery. But is there
Sure.
a good enough version where people still want to trade? I guess what I'm getting at here, and it's somewhat of a roundabout question, but like if this theory does not come into fruition, which is that some, what does he say, like shrimp farmer in Tokyo will update the price of shrimp faster because he's close to the boat that just came in or whatever. It's like a naive example. But if this does not occur, then is there still something of value in trading assets on something like Solana if it's not where, this price discovery is occurring? For like something like, wait, let me just say one last thing.
Yeah.
Like for something like stable coins, like peer-to-peer transfers of dollars where there's not, MEV or something like this. Yeah, I can certainly understand why Solana could be like extremely valuable for something like stable coins. But that wasn't the original premise, right? The original premise is NASDAQ on chain. So I'm kind of wondering, like, if it falls just short of NASDAQ on chain, where do you see like the value proposition? How do you think about this?
Well, so like the value proposition then is like lower, so certainly not necessarily like lower transaction costs, right? Like you actually could probably trade on NASDAQ for cheaper.
Yeah.
I think it's the decentralization aspect there, right? Like that actually is valuable to people, the permissionless aspect, like the access to certain types of liquidity or like better pricing for illiquid assets.
Yeah. Asset creation.
Asset creation and all of that is a lot easier on chain. And like there is still a reg arb, right? That is still exists, at least for a little bit longer. And so like, regardless, like, there's still like a reason to trade on chain in the same sense that like there's a reason to trade on like, some other venues, like not just New York Stock Exchange or NASDAQ, right? Like there are structural reasons why we want, people want to trade on things like BATS or, IEX or something, right? Like maybe that's a preferable venue for them. Is it where price discovery happens? Maybe. I still think though that centralized venues will like always have a speed advantage, right?
Yeah.
But that will eventually, like that, those speed advantages are not necessarily the most efficient. So maybe there is a resting point where something like through, can handle the right amount of throughput and can do all of, handle a bunch of other use cases and do settlement. That's another, reason why like Solana might, or these other, L1s might succeed is like settlements on chain, maybe your banking is on chain. Like there's also that advantage, right? Like there's a efficiency advantage to not having to go through all the clearinghouses and all that. So like this is all to say that like I don't think there are certainly experts on like the macro of like traditional markets. And I think even still, like they will probably say the same thing, that like you need all of these venues to make the market very efficient. And it's the various speeds and types of contracts and all and the products that end up making them valuable. And so Solana will slot in somewhere on that like kind of like spectrum, I imagine.
Yeah.
Same thing with Through. The only thing is that we expect to have like a very high bandwidth platform that's not just for trading, right? Like there will be other things, that we are looking at. Like, okay, what if you want to like clear like 100,000 employees payroll on the chain and things like that? Like, so like maybe there's another reason to trade on the chain because your 401k is there, right?
Yeah.
like, and you're getting paid on the chain, and like, maybe that's a flywheel as well that like gets people, sticking around. So again, all sorts of reasons.
What do you think of the current state of MEV on Solana? From what you know, I mean, I don't know how closely you followed in the past like 6 months or a year, but like from what you know, and obviously your work at Firedancer, like what do you think is the current state of MEV and MEV research or whatever?
So like, I'll defer again to Jerry and Eugene from Ellipsis, who like has say like, I probably should listen less to the people who don't write code or work or have users or have something in production. But what I will say is that like MEV is like not necessarily like a problem. It's a like thing that applications and users create as well for themselves, right? And in many cases, like the user like gets to see what their slippage is going to be on some of these things, and they get to see all of that. Like they are making a concerted choice.
Yep.
And it's better to just inform them that that choice might be really bad. And when you're on pump.fun, like, 99% slippage, like, probably.
Right. Exactly. Still worth it.
It's still like, you're still made your money. So like, sit down. Like, I think the world is surrounded in value extraction. Like that's what Citadel does. Like that's their principal job. That's what all these big firms do. So like, why are we like, I understand we want to make the world a better place, but like instead just make do the competitive market dynamics, make block producers competitive. They will compete to give like retail a better price while also paying, sufficiently to get their block included. If you have good competition, right? Because a user's only going to send a transaction, to a block producer, let's say like they're like they're like Temporal or Jito, right? Like, and they're running their own block production, right? In this case, on Through. And what you can do then is you can say, okay, I'm going to send it to both you guys. The person who gets it included first, right, probably have the better pricing, and whoever can offer me like the lowest fee and the like, the best experience, I'm going to come back to more, right? Like, so there's like normal markets start to emerge when you set up something like we have on Through, right?
Do you think the level of competition is there on Solana, or would you say no?
I think they're ready for it. They just like, it will be impossible to get to a, like the model that we are trying to build here for Through, right? Like getting rid of proof of stake is going to be an insurmountable task.
So you think that's like, when you say you think they're ready for it, but there is this like intractable problem, you think that the design of proof of stake is that intractable problem? Yeah.
And also like a leaderless design would also like require you to move away from some of the proof of stake concepts. Right. And so I, for those exact reasons, I think like this is like, very much intractable problem for any proof of stake network right now.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Gwart Show, be sure to check out the individual feeds. You can find them on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like the Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin.
All right. Well, do you think we touched on everything? Anything else you want to discuss?
Do you hear about L1 token value?
Yeah, let's hear it. Let's hear your take. Yeah, let's hear your take. I'm done arguing about this, so I'll defer to you.
Yeah. Well, are you referring to your Hasib?
I mean, just in general.
Hasib affair.
I'm just not engaging anymore. I'll spectate or heckle a tiny bit from the sidelines, but it's just good. So go ahead.
Yeah, I think like a very divergent opinion here that like two things. One is, well, it's actually really just one. The token valuation stuff is really boils down to this, for me at least, is that like at the end of the day, I'd much rather the tokens price be tied to like the cost of block production, right? We talked about this whole mechanism. We talked about all of this. I'd much rather the like token trade at a value that lets people like clear transactions efficiently and let block producers, price the token and all that, rather than and focus on like making transaction fees like a revenue generating source for the validators, right? Like, and I'd much rather the value be tied to all of those factors rather than what it does in proof of stake, where it's like a store of value style of thing.
Right. Okay. Well, I don't disagree with that.
Yeah. Like I'd much, I'd hope you wouldn't. Like I'd much rather the token be valuable because like its purpose is like a mode of, interacting with the chain, right?
Yeah. Like it's relatively close to its utility value, like in terms of the demand for the token is high because there's high utility with it.
But the proof of stake tokens, they're also close to their utility value. It's just that there's like a, you can think about like the exact function is like, the maximum of whether the utility of it as stake tokens or as like these like transaction fee tokens. Right. And it just ends up being like maxed up to the it's slammed up to the proof of stake value and store value style value rather than like this utility token value. And like this is completely constructed for no reason. Right. Like this is because we have some like illusion that security is important. Right.
Wait, elaborate on that. Good. Yeah, elaborate on that. I mean, I assume it's like a similar take to Tully's, but what do you mean?
So like,
we had this illusion
I've always
of security?
believed this. Like, well, so there was this glorious moment where Solana's economic security was higher than Ethereum's, and nobody cared. Nobody gave a shit. And like, this was like a beautiful, glorious moment, and nobody noticed. And like economic security is a meme, right? Like it doesn't actually do very much. And like, let's say you are commandeered as a chain, like by, someone buying a bunch of tokens, like, well, like if they perform poorly or they don't, like in our case, at least, like there's that decay that will kick in, right? They'll eventually like, nobody will send them transactions. No one will send them blocks. They'll get like socially slashed out of the network, basically. No one will interact with them. And so like these problems end up solving themselves, or there's like a eventual like, liveness problem for like a few days or something. Right. And that's the worst thing that can happen. Right. Or a few hours. Right. And so like economic security is a meme. It's never the end of the world when like there is like an attack on consensus. Like the social layer does still like reign supreme here. Like
they can fork them out too.
Yeah. Like, just like get together. Like you don't like if the network doesn't like, I don't know. Like if the like minority doesn't like the network, like the rest of the network, then like, stop participating with them and do your own thing, I guess. Right. Like I have no illusions that like the social layer does not kick in all of the time, and take over. So
I think it assumes like a very, I do think this, actually, Kyle Samani, I heard him on a podcast a while. Well, maybe it was recent. I'm not sure. But anyways, I heard him on a podcast basically saying this is kind of a vestige of proof of work and like the ideas from proof of work. And you could argue even the degree to which it's relevant in proof of work. I mean, the fact of the matter is like if you have a bunch of miners that people aren't upset with and they continue to not censor transactions, right? Like it's, I think you could argue similar, but anyways, this is sort of a vestige of proof of work. I would also argue that slashing is a vestige of proof of work. In proof of work, you lose, it's the opportunity cost of burning all that fuel and the capital or, energy and the capital cost of your ASICs. There's not really like a perfect corollary in proof of stake. So the idea was to create like a slashable event such that there is a real opportunity cost, right? Now, whether or not you really need that, because at the end of the day, validators should be maximizing their own utility, and that means not pissing people on the network off, right? So I tend to agree. But this was very much blown up, like with Ethereum and the move to proof of stake, right? Like I think you're right. This was largely a narrative-driven sort of idea to, in many ways, probably justify the speculative premium that had already been put on these tokens, right? Like if when you make the point like the token should be valuable roughly equal to its utility of the network, which is hopefully has high utility. That's right. It's like it's hard then for a network coming in with like a $500 billion valuation to kind of reconcile that. So I think that's where that comes from, and I think you're right.
I think like the last thing that I'll say on this point is like that also ended up spilling into like the TVL wars and all of that. Like I think then once people got obsessed with like the valuation of the token, and then they like the amount of security that they have, then they'd start talking about tokens. And the real delusion there is that, for example, on Through, I don't like the goal is actually that like I want people to do more with the assets that they have, right? Like I would much rather like if you can do more economic activity with less, that is literally the definition of capital efficiency, right?
Right.
That's like extremely like important factor in where and when people trade. Like how much does it cost to trade? How much capital do I need to get this amount, like do this amount of economic activity? Yeah. Like those are critical things. I mean, it's things I thought about when I was at when we were at Framework Labs, like how much what leverage ratio makes the most sense? Like what are all these things that like, these factors, like it's the same thing on chain. Like, and I don't get why people are so obsessed with like TVL, or were at least obsessed with TVL, those things just don't matter. And security, like economic security is not as a meme. And like, I will take that one to the grave.
Yeah.
So,
all right. Well, what is I'm not sure that but like, do you have any timelines on Through updates? I saw I read your website the other day. I commented that you needed something that wasn't faxed.
We don't have any paper. So through.org. You're welcome to look at the handwritten note or hand typed note that's there. It's actually not hand typed. It's not hand typed. It's actually just a font. But we have to be a little performative here. But I mean, like that website's going to change soon. We got exciting things coming. We're going to launch a little fun kind of pre-alpha testnet sort of thing that people can play around with pretty soon. In like a month or two. And that'll be really cool. And from there, it's like, we got to build the rest of the network. There's a whole bunch of stuff left to do. We're a really small team. We're like 5 people right now. We plan to keep it in that kind of size range. So like, the only thing we really focus on right now is hiring the highest agency engineers and maybe 1 or 2 really good business development people. But like the team's really small. We like are going to build this thing with a very small team. And we got a lot of work to do, and it's all coming, extremely quickly. We've made like an amazing amount of progress in the like 4 months post some other exciting things that happened with the company. I'm really excited for people to see this thing. And then we'll release a bunch of SDK support so people can start running, building smart contracts soon after that, like July-ish first release that people can start to play with.
Okay.
So a lot of things coming.
All right. Where can people find you on Twitter or anywhere else you want to show?
So you can check out Through at through.org. There's a little careers link if you're a really amazing developer or
sorry, that's the one thing you can't do. Unfortunately, you're only allowed. Because the most elite engineers should be going to Ellipsis, and then if you get rejected from Ellipsis, feel free to apply to.
Feel free to go to Ellipsis if you're just okay, and if you're really good, and they won't see your potential, and then you can come to Through.
All right.
So. The other thing is you can find me at on Twitter at Cantelope, CANTELOPE. There's no U because I couldn't spell. PELE. PEEL. I can't spell today. You're gonna have to cut that.
All right. We'll make sure it's the right name in there. All right. Well, thanks so much for coming on. That was great.
Yeah. Thank you. Thanks for having me on.